Hey everybody, this is John. Welcome to the free video. Fun day in the class today. We did the exponential class, which has been awesome, and we set up some good trades in that. For a regular trade, one of the ones I like here is Amazon. We have a monthly squeeze. Remember, you got 8 to 10 months of upside here, and then remember we're near new highs. Okay, we've got a daily squeeze. Good move today on a little uptick in volume. And earnings are like in a month, so the stock kind of likes to run into earnings. So in the room today, we bought some call options out in July, the same week that the earnings are taking place at. We've got to pay a little bit more for those because the implied volatility is starting to rise. But remember, if direction and implied volatility go up together, that's a good opportunity for out of the money calls. Okay, so that's a fun one. And another similar one is Google, where you got a monthly squeeze setting up. You got this longer term trend line that we're approaching. Okay, we got a monthly squeeze. The daily squeeze has fired, and if you go into the weekly, bam. So I love this one as well. And what we're doing here is just, again, buying some options during that same week in July where there are earnings, with the idea that we can get a little bit of a pop into earnings. And both if the underlying and the implied volatility is increasing, that makes out of the money options a very viable in this type of a situation. For AMBA, let's look at this one. I wish I would have bought puts on this on Friday. Instead, we just sold calls with this move here. So obviously those have expired worthless, which is great. When you sell the call, you actually want it to expire worthless so you can keep that premium. Big question is what happens now? I think at this point we're going to be more in kind of a sideways kind of a market. I know with the trade of the week, we sold some puts on this, and so far so good on that. Another stock here that I've been keeping an eye on is YY. Not any squeezes setting up except on smaller time frames, but after this nice pop higher, we've pulled back and looking for this to make a pop. So a lot of times on stuff like this, a lot of times people ask like, okay, so you know something like this, you get a pullback and then you get an extension move. Okay, so what do I mean by that? Well, in its simplest form, it would make sense that this could go to about $85. Okay, so in a situation like this, you could buy like some $70 calls and see if it goes. Okay, well, let's look at that real quick. So let's say we went out to July and we got us some of the $75 calls, which are at the money. They're $4. And if we went in the money, say the $72 calls, they're $5.90. And essentially if it did go to 85, let's say the $75 calls. If we did go to 85, then the $75 calls would go from about $4 to $10. Okay, so you'd more than double your money on that. But essentially you're risking $400 to make $600 in that scenario. The other thing you can do is what's just called a butterfly. So another way to set that up is with a butterfly. So if you buy a call, essentially in that case you're risking $400 to potentially make a $600 profit, which is great, decent risk to reward. A butterfly, you can set up the same trade, and by the way, this was per contract. Okay, so per contract. So if you're going to do 10 contracts, then you're risking $4,000 to make $6,000. Okay, well in this case with 10 contracts on a butterfly, I'm risking $300. Okay, to make $1,700. So what I like about butterflies is that if you have a pretty clear target like that, it's actually a much better way it's a much lower risk in terms of risk to reward, a much better situation. And you can actually, instead of if you're buying an option, sometimes you can only do 2 or 3 positions. With butterflies, you can do like 10 because you don't have to do like much of them. And the risk is small, and you've got a better probability of one of those pinning and hitting that spot, right, and kind of cashing that in. So if you're not familiar with butterflies, Bruce is going to be having what's called a bread and butter butterfly class Wednesday, June 24th. Okay, this is tomorrow night. from 8 to 10 East Coast time, which of course is 7 to 9 Central time. All right, simpleroptions.com/BNB for bread and butter. And what we're going to be talking about here, what he's going to be talking about, is the one butterfly strategy to use every month, regardless of what the market is doing. I've seen this one. I love it. Step-by-step checklist of how to put on the trade and take the trade off so you know exactly what to do, when to put on the trade and when to take off the trade to maximize your profit while minimizing your risk. Okay, and the key with this is you're going to walk away understanding how and why this trade works every month so you can confidently execute the trade the next day. How the strategy works on any size account, and how you can use it to save in commissions, and a lot more. Bruce is a wealth of information when it comes to this kind of stuff. He traded with a hedge fund for 20 years on options. He knows the nuances of this kind of stuff better than anybody else I've ever met on the planet. All right, so simpleroptions.com/BNB, and the good news is this is a quick 2-hour class, very specific topic. We're going to be talking about $97, get you up to speed and off and running with this strategy, which is a great tool to have in your trading toolbox. See you guys at the webinar, and have a good rest of the night.